And we're back. Welcome back to the Retirement Decoded podcast with Scott Tucker. I'm your host, Scott Tucker, and Associate Advisor Max Rand.
Hello, Max Rand.
Look at that. If you're on YouTube, you can see the camera switch. We have this whole fang-dangled robo-taxi, not a robo-taxi, fang-dangled robot cameras.
Whatever it is, it's really cool.
Switching from one camera to the next. It's pretty cool. Because Pete, our video guy, he says, well, we can hire somebody to sit in the booth and change the cameras. I'm like, no, Pete, we are not for full employment here. We are trying to have the robots take over the whole company.
I'm all about it.
Yeah, not really. But we don't want to, for just a podcast, have somebody come in once a week and switch cameras for us. So we have our question here that for this episode. It's on estate taxes. And this morning's question comes to us from Mark. Mark says, Max, I keep hearing that Illinois has a $4 million estate tax threshold, not an exemption. Well, Mark's pretty sharp, huh?
Mm-hmm, he is.
So Mark says, Max, I keep hearing that Illinois has a $4 million estate tax threshold, not an exemption. If my estate ends up just over that amount, the $4 million. So he's saying if he goes to $4 million and a penny. Mm-hmm. So if my estate ends up just over the $4 million threshold, how badly could my family get hit? ? And what should I be doing now to avoid that? ? So Max, a lot of people misunderstand that, federally, because this could get confusing for folks. Federally, in 2026, because this is going to change every year, inflation adjusted. In 2026, an individual federally can leave behind $15 million, and there's no federal estate tax unless they were to cross that line. And if it's a married couple, $30 million in 2026, and then inflation adjusted thereafter, unless they go over. And they would just pay, federally, you just pay tax on the amount over the $15 million as an individual in 2026, or $30 million as a married couple. However, federally, if you went over those rates, the estate tax federally is 40% of the amount above the exemption.
Yikes.
So, Max, as you know, and as I think most longtime listeners to the podcast know, and we do have podcast listeners. This is weird, Max. We have podcast listeners all over the United States and in other countries.
I love it.
Like Russia, Saudi Arabia, Egypt. I don't know why.
Maybe they were here in Chicago and moved to Saudi Arabia.
We do have a client that periodically gets sent to Saudi Arabia for a week for work, and then he comes back. Mostly he works in the U.S. or Canada, but sometimes they send him to Saudi Arabia.
Oh, man. It'd be rough.
So we are federally licensed, so we do help folks all across the fruited plain. Most clients are Illinois residents, but certainly not all. So federally, there's the thing, Max, that people think so much about the federal exemption, and that in 2026 an individual could leave $15 million with no federal estate tax, or $30 million as a couple. And if you don't have if you don't even have a trust, or what we call a Tucker Shelter trust. So even if you don't have a trust, federally, you'd be okay to have one spouse pass away without a trust, and that $15 million would transfer to the surviving spouse. That's called the unlimited spousal deduction. And so the surviving spouse federally has a $30 million exemption. So you think that's hey, what do I need a trust for?
That sounds all gravy to me.
Yep, sounds really easy. You say, why would I ever need a Tucker Shelter trust or whatnot? The issue is, in some states, and last I counted, there's 12 states that have estate taxes or inheritance taxes. Some have. There's one or two states that have a state tax and inheritance tax both, and the laws keep changing. So every time we have somebody from...
Stay away from those.
Yeah, every time we have somebody from Nebraska or Maryland or whatever, we have to go check it out and do our research to make sure what the current law is. For instance, Max, our friends who are in Massachusetts, they used to have a $1 million exemption on their estate tax. Now they have a $2 million exemption. What Mark is getting at, in Illinois, he must live in Illinois, so that would make sense, right? Otherwise, why ask the question?
Right.
So in Illinois, we have a $4 million threshold. So this is crazy, Max. If you're an individual or a couple in Illinois, either way, the threshold is $4 million.
Yep.
Right? So if you die with exactly $4 million, no Illinois estate tax.
Yeah, most people, they don't know about the Illinois estate tax.
They don't even know we have one.
They think it's like the federal if they do.
Right. That too. So then a lot of folks think, Mark, that you could have no Tucker Shelter trust. You pass away, and then the $4 million, people think it's an Illinois exemption. It's not. People think that they have a $4 million Illinois estate tax exemption that would then transfer to their spouse, and then their spouse would have an $8 million exemption with Illinois. That's not how it works. And Max, you know this. I'm preaching to the choir, right?
Yep.
So what it really happens is if you die as a couple, let's say the couple example, with $4 million and one penny without the Tucker Shelter Trust, the estate tax to Springfield is going to be $285,000.
It's a lot of money,
right? But if you passed away, but if you passed away with $4 million even, no tax.
Makes sense, right?
It makes a lot of sense, I think. I think, the people in Springfield, Illinois, we're talking about, folks. The people in Springfield in the state house and the state senate, what profession do they tend to have in common?
Well, I wouldn't say some kind of law background, but
oftentimes they're attorneys. Sometimes they're not. But a lot of the folks in our state house and state senate in Springfield are attorneys. There's a conspiracy theory brewing here, Max.
Where are we going with this?
Do you think they come up with crazy laws in Springfield to feed their law practice for the 8 months they're back home in their district?
That's not a bad thought there. There may be some validity to that.
We do have a former House Speaker from Illinois. He was House Speaker for about 40 years, and he also became state chairman for the Democratic Party. Not to make it political, but that's the party he belonged to. So he ran this. He got to be Speaker of the House because he was in the House so long. Mm-hmm. Then he also because he was Speaker of the House, it was easier for him to become chairman of the state party. And then he had a deal in Illinois. We have the second worst property taxes in the country, behind only New Jersey. I was like, it's stereo, and right. And so what he did during the other 8 months that he wasn't in Springfield, or really the law firm ran 24/7, not 24/7, but 12 months a year.
Yep.
And so he built up a law practice appealing property taxes.
Wow.
He got to where his law firm was the law firm that represented 2/3 of the downtown skyscrapers in Chicago.
What?
Because in Cook County, they say, in Crook County, if you have whatever if you live in Illinois and you're irritated in Cook County, for instance, about your property taxes being so high, imagine how much higher they are if you were to multiply them by 2.5 times. That's the rate in Cook County that commercial property taxes are. So if you have a $500,000 house and you're irritated that the property taxes are $10,000 a year in Cook County, if you had a $500,000 commercial property, you'd be paying $25,000 per year.
Yeah,
that's why
everyone's gone.
That's why the dry cleaner is so expensive, Max.
Makes sense.
That's why it's so expensive to go to dinner, right? So, so we have these crazy estate planning laws, and then what it feeds is into some of the law firms that. And I'm not saying that everybody. I'm not saying every attorney's crooked. Some of the ones in Springfield might be.
Oh yeah.
So what happens is, because we have this, if you might pass, so you might say, right now, Bob and Mary, you're sitting there listening or watching the podcast right now, and you might be saying, well, we only have $1 million right now, and we're 60 years of age. Well, 10 more years, $1 million is likely to put you at a $2 million net worth, and 10 more years after that, when you're 80, likely that you're at a $4 million net worth. You go one penny over, the estate tax to Springfield is $285,000. Now, if you had what we call a Tucker Shelter Trust, now, Max, you and I were not attorneys.
Yep.
We stayed at a Holiday Inn Express last night. Separate rooms. Not that there's anything wrong with that. But
it's 2025.
No, 2026.
Yeah.
You gotta turn your calendar ahead.
Sorry, I'm still behind.
Max is still writing checks. Well, you probably don't write checks.
No, I mean, it's 2026.
No, but I write some checks for the business, and when it's early in the year, I'm careful, but once in a while, like, oh, you gotta shred that check. That's no good.
Yeah.
So it's 2026. No judgments. So what happens in Illinois, if you're a married couple and you're concerned that you're at $1 million today, and then you'd be at $2 million, $4 million, and penny over, and pay $285,000 to our friends who aren't in Springfield, then what you can use is a thing called a Tucker Shelter Trust. Now, we're not attorneys. We use a law firm to draft these or to help get these done. And so a Tucker Shelter Trust, if you're a married couple, takes you from a $4 million threshold to a $8 million threshold, and at least buy you some space.
Yep.
Buy you some time. Beyond that, we might need to consider using irrevocable trust. Not legal advice. Don't try this at home. And again, we're not attorneys, so we work with the law firm that we work with the most and make sure we get this set up appropriately. But if we're going to cross the $8 million threshold as a married couple in Illinois, then we can use irrevocable trust, perhaps, and potentially. Compliance likes it, Max, when I say potentially. And so, yes, that's right. And so, what we can do is we can gift money from your estate, and it has to. Now, if we gift money to an irrevocable trust, we don't want to gift all of it because we want to have access to it while you're still living.
Yep.
But with a lot of folks, what we do, we consider doing, and we talk to the attorney on this and everything. We might gift maybe $1 million a year, keep taking the heat off the. I don't know how you'd say that. Taking a little bit of the boiling water out of the pot before it overflows. So
there we go.
So we take some of the, maybe have a big metal ladle like in the Westerns, and have another pot over there on the side to keep that cool. So we might not put all the money, of course, in the irrevocable trust, but maybe we're bumping up against the $4 million if you're a single person, or the $8 million if you're a married person with a Tucker Shelter trust. And so maybe we take $1 million out of there maybe per year and keep you like maybe $3 million for individual, maybe $7 million for a couple, but make sure that we keep taking a chunk out of there per year into irrevocable trust. Not specific advice, not legal advice. Don't try this at home. Get on our phone calendar at tuckerretirement.com. At tuckerretirement.com, you can get on our phone calendar and figure. We'll see it. You'll see our phone calendar there and figure out a time to talk to us. 15 minutes for free, Max, in the coming week with one of our financial planners.
Yeah.
Might be Max Wren, might be Andre Hootie, who's not in the podcast studio today. But he's still with us, Max. He's not been fired from yet another podcasting job.
Rain Man is still here. We need him.
Yeah.
We love him.
I say that as if he's been fired from podcasting jobs. I'm making light of. We have a radio show in Chicago on WIND on Sunday mornings, and we have a gentleman who helps us with the production, and sometimes he's in the studio with us as a co-host. And I always tease him that he's, and this is actually true in the radio business. Keith has been hired and fired from all the radio jobs. He's worked at some of the stations in town here in Chicago twice.
And it kills me because Keith's a really cool guy. So
yeah, but it's radio business. They don't care.
Just cut through.
It's like, let's cut expenses.
Budget cuts. Keith, you're the first to go.
They need a number of producers, but they're trying to get more with less, I guess, like a lot of folks. So Mark says, I keep hearing that Illinois has a $4 million estate tax threshold. So why is the estate tax so weird? And you know why, Max. Say it's an individual or a marital threshold in Illinois at $4 million, unless you have that Tucker Shelter Trust for a couple to get to $8 million. The reason why it's so drastic that at $4 million you pay $0 and at 1 penny more you pay $285,000 to Springfield, it's because it's called a waterfall tax. You could call it a lot of different things. It goes back to $1 or even to penny one. If you cross that $4 million threshold by 1 penny, they apply the tax all the way back to $1. Then it has a bunch of crazy brackets, 0.8% all the way up to 16%. We had a couple, I don't know if you were in this meeting or not. Yeah, you were. We had a gentleman come see us. He came to see us without his wife, which is not advised. You can go to tuckerretirement.com, get on our phone calendar. We have folks all across the country. We can work on Zoom and DocuSign and FedEx and all this. But a lot of folks that we're in Chicago, northwest corner of Chicago, we're near O'Hare International Airport. If you want to fly in and come see us,
yeah,
right?
Do it.
Also, set up an appointment before you book the ticket, right?
Yeah, might be a good idea.
Then just across the street, we're on Higgins Road, and just across the street is the old Big Ten building, not the new Big Ten building, and there's a suburb of Park Ridge right across the street. So that's where we are. But the gentleman actually, he lives darn near across the street from the office.
He actually lives across the street,
like 1 block further.
1 block over,
right?
Yeah.
And he
could throw a stone and hit his house.
And he came to see us about somewhere between 6 or 10 years ago. I couldn't figure out exactly, but we were in an old office then, in the same complex, but like around the corner, different building number. And they're all these 5 buildings are all connected, kind of on this first floor level where we are today. And he came to see us 6 or 10 years. I think it was 6 years ago. He came to see us, and we have $6 million, and they just saved. And he's actually a CPA by profession, which is crazy. So he came to see us 6 or 7 years ago, and I said, you really ought to think about the Tucker Shelter Trust because you're over this $4 million threshold. It's not an exemption. It does not have spousal portability without the Tucker Shelter Trust. We really ought to think about doing something like this. He doesn't do anything for like 6-7 years. Comes to see us about a month ago.
Yep.
He goes, "Oh, Max, Scott, it's even worse than last time I was here." I go, "What's the problem?" We'll call him Fred. "What's the problem, Fred?" And he goes, "Well, My wife just inherited $6 million from her uncle, and we're really sad to see the uncle go, but we're really happy to get the money. But now we're really irritated now that we have $12 million. He goes, how much now? And he goes, Max, how much now is the Illinois estate tax if we pass away without the Tucker Shelter Trust and we have the $12 million? $1.92 million goes to Springfield.
Wow.
Not to your kids, not to your nieces or nephews, your brother or your sister, not to your favorite charity. Max, we just talked to somebody the other day, and she said her favorite charity is the Sierra Club.
Yeah.
Well, so she cares about the environment. So would you rather have your money go to the Sierra Club or to Springfield for the Illinois Department of Revenue? Or would you rather have it go to kids or nieces, nephews, or whatnot? Or I like children's charities. Mercy Home for Boys and Girls.
I don't know. Some people's
One of my
legacy is give more to the IRS. So
yeah,
right.
Do you know what IRS stands for, Max?
What does it stand for?
It stands for I rob seniors.
It's messed up. I laugh at that.
Yeah,
it's a little true.
You can use that one.
Yeah.
Yeah, it's not funny, but that's how I get through life. If there's a problem, I kind of laugh at it. Then I figure out how to not have to send a senior's money to the IRS. This is crazy.
Yep.
So here we're talking about Illinois rob seniors. So, yeah. So
it's true though.
So Mark keeps hearing the Illinois has a $4 million state tax threshold. Very sharp observation, Mark, that it is a threshold. It is not an exemption. And there's no spousal portability. You don't get to leave the $4 million threshold that you didn't use or whatnot. It's not because it's not an exemption. So you don't get to leave the $8 million threshold to your spouse unless you have a Tucker Shelter Trust, then you'd have that. Federally, there's a little bit of a wrinkle if you're an Illinois resident like Mark is. We can gift money, as long as it's 3 years before you pass away, we can gift money from your taxable estate for your net worth. As an Illinois resident, we can gift chunks over to an irrevocable trust. Now, there is both federal and state on the estate taxes, there is a 3-year look back. So you have to do this more than 3 years before you pass away. We had a lady recently that passed away at 93 years of age.
Yep.
She lived in Mount Prospect, Illinois. That's where Natalie and I live too. Northwest suburb, just 15, 20 minutes from us right now. And she waited until the last month of life to then try to gift money away. But Illinois and the federales, they both look back 3 years.
Yeah. And you said something great earlier, Scott. You said a lot of people don't think this will be a problem for them, but if you're in your 50s, 60s, 40s right now and you have a couple 100,000, $1 million or so, this is going to be something you're going to see later in life.
I like to keep it really simple, Max, because I'm a simple man. If you're 60 years of age right now, you have $1 million. That money doubles about every 10 years pretty easily. No guarantee, but that pretty easily happens.
Yep.
80 years of age, and most people say, well, I'm going to live into my early 80s, mid 80s. Mm-hmm. So 80 years of age, $4 million even, and then a day later, probably at least 1 penny more.
Yeah.
Theoretically, hypothetically, and we could really get walloped with $285,000 of your money going to Springfield. And you might just rather have it go to a charity or to children, grandchildren, or anything else.
There's a lot of hardworking folk here in Chicago, so kind of, the average person next door is going to experience this. So
yeah, and
a lot of people are going to be impacted.
It's one of the biggest blind spots nobody's aware of right now.
I think 99% of the people we sit down with, they have no idea this exists. Would you say that?
Yeah.
Close.
And another 5% of them have no plan to work around it.
No, they just accept it.
It's about 1 in 20 people we meet with that have this nailed down.
Yeah.
1 in 20 is not enough. 5% of the population is going to get nailed by it. So to avoid that, so here's the thing: this is not advice, Mark, for you to go do this, but if you are concerned about that $4 million or that $8 million, if you have that Tucker Shelter Trust, what you can do is you could don't try this at home. We need to talk to you, and we need to talk to your attorney and all that. We could gift maybe $1 million a year over to an irrevocable trust. Once it's in the irrevocable trust, it's no longer your asset, but there is still a 3-year look back. There is no Illinois gift tax. So there's no limit in Illinois how much you can gift. Now, if you do gift $1 million over to the irrevocable trust, we do need to file a gift tax return with the IRS. There's no tax for that, for gifting above that $19,000. In 2026, the number is still $19,000 per individual that can be gifted without a gift tax return. So if we gift $1 million, we need to file a gift tax return that does count against, say, I don't know if Mark's married or not. He did say family or something, so I don't know if he's married though. So if you were to gift $1 million as a single person, and in 2026 you're allowed to gift $15 million federally, in your entire lifetime, that $1 million you gift will count against your lifetime exclusion with the federales on the $15 million. So you'd be left with $14 million more that you could gift without having to pay any gift or estate tax of the 40% rate. If there's a Mark and Mrs. Mark or a Mark and Mr. Mark, either which way, that we help same-sex couples too. Treat everybody the same. You could, as a couple in 2026, gift $30 million as a couple federally, and we just file a gift tax return, and you would then have maxed out how much you could do without running into federal estate taxes or gift taxes at the 40% rate above the $30 million if you're a couple. So, Max, I think we've either thoroughly explained this or really confused people. I'm not sure.
Might be a little more of the latter. But
I'm not sure which one. If you would like to talk to us 15 minutes for free over the telephone with one of our financial planners, Max will get their questions answered.
And answers questioned. That's my favorite part.
At tuckerretirement.com. Well, Max, it's been fun. It's been real. It's been real fun. We'll talk to you in the next podcast.